Ladies and gentlemen of the crypto space, we're live at 11:17 a.m. Thursday, March 25th, and someone get the fire extinguisher. The markets are on fire, and that's not the good kind of fire. And you got to remember, there's a lot of contextual macroeconomic shenanigans that never were good. Do you think for a second the economy was good after March of last year? The workforce is in shambles. The monetary system has been obliterated, and everyone thought because people were buying and it was going up that it was good. No, we were completely on the defensive the entire time. And it's a good reason why I've been harping for the past year about protection and fear. And it's nice that it's going up. Probably should have never been going up. The central banks never really should have done what they did, but they did. And it's a nice Yahoo article that I have up. I'll show you guys, and that really um, expresses in a great statement um, what occurred. And it's hard to understand macroeconomics because we're talking about large time frames. You can only look back and understand what happened in 2020 from 2021 and analyzing in hindsight. And man, the title of this article really hit it on the head. So all fun till the music stops. What's next? So the music could stop at any time, even in a bull market, and that's exactly what I've been trying to express. It's going up. It's going up. Yeah, but what if it goes down? What if it starts going down? And that was yesterday. And bam. And less prepared for it to go down, even when the market's going up, you get hit. And a lot of folks are down 10, 15, 20, 30%. I myself have a 10% dip on the portfolio. But I'm prepared. And I'll show you, I'll talk about my percentages and how I'm structured and prepared for what comes next. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto, non-custodial DeFi, or nothing at all. Bam, let's pop it over to the main screen and see who's in the stream. Got Waves in the house, Mr. Weeby, always a pleasure. Tao is a hey, Michael Wilson on vacation, Cloudy Galveston. Ooh, cloudy. Yeah, a little cloudy down here in Florida also. Welcome. Igor, my man, RR in the house. Let's do this. 14 people in the stream, 3 likes. We can do better. So here's that Yahoo article that literally says Powell hopes history is kind on the central bank's actions. It could have been worse. So, you got to appreciate such a statement. That's true. I mean, their intentions were to prevent an outright halt or, failure of the economy in the grossest of senses. Um, should they not have done it? Should they have done what they did? I don't know. That's one for the brilliant economists and maybe even philosophers. What is the right thing to do? How do you manage global, money systems? Um, and if they did nothing, that would have been very painful. Um, and then if you can't pay for things and you can't pay for support and you can't pay for relief and you can't, if the system fails where people don't have work, which because they currently don't, but if 50%, 60%, if the system fails, that's when a society enters, a period of chaos. If you can't pay police to maintain order, you have chaos. You have uncivility. You have this mayhem, and then just things spiral into a dystopia, and that's the reality. We're on the edge. We we were on the precipice of dystopia, but we never were not. It's been like this the entire time. The fact that the system or equities was going up for companies that were losing money, it's a fantasy. Not a lie, but it was really happening. But it was like a dream. It wasn't real. What is real? What's real is that a tremendous amount of persons are absolutely in pain. They're out of work. They're completely broke. They have bills they can't pay. And one of the biggest topics on my mind is the fact that evictions, the memorandum on evictions is being pushed hard. And that just further substantiates that the system is screwed. And they're barely trying to maintain social order. I stated a couple times on Twitter over the months, at some point the government is going to have to finance social order. I was wrong. That's what they've been doing. They've been financing social order using their manifested um, money machine. Well, it's not a money machine. It's financial theory and this crafted human-created system. The foundation, its purpose, is social order, monetary policy, and fiat. And even if it's gold backed or whatever the hell you got, it's all about organization of time, incentives and to for persons to participate productively. And it's a system of structure and encouragement and motivation. And if that fails, you have that dystopia I've mentioned. So Powell says he likened what occurred to Dunkirk, and that was basically like an evacuation. That was just mayhem. Um, and when he says they think they were successful in what? You don't have full employment. You have the debasement of the fiat primitive, the dollar, um, absolutely a tragedy. The dollar was respected and it was honorable about, a country that broke away from the empire. England still has, if you look at the history of England and its current territorial expanse, it basically controls a large part of the planet. Quite interesting. So the U.S. was always about it broke free of the empire and it did what it did and it was honorable and dignity and righteous. And I don't know. And nowadays, is that the case anymore? It seems all perverted. Seems all perverted, boys and girls. Let's keep it going. Robert, first time on the live stream and watching the vids and follow you on Twitter. Great stuff. Thank you. I only hope I could help. That's the whole point. That's the whole point. Activate the tanker FUD. I mean, it's not even about FUD in the market. The economy's screwed, and I guess they have ideas and plans, but there's a damn reason the IMF and the other boys are talking about like a real systemic reset because it's not that it's unsustainable. It was never sustainable. Fiat's not sustainable. The natural value of fiat is zero because they're going to print and they're going to debase the crap out of it. And the terminologies you use where they say they measure inflation are meaningless. Philosophically, yeah, the data, PMI and whatever, um, is meaningful. It suggests what's going on maybe in the micro time frames, but the big picture is what I like to think about. And man, everything about the big picture is screwed. It's horrible. All right, so let's keep going. I don't need to just be screaming and complaining and trying to explain why the markets are absolutely tanking because as I said for the last year, we can expect the markets to tank at any time. It's been magical mystery theater why they actually went up. Mr. Weeby, regarding the upcoming Lazy Ape CVP boost. Ooh, that's got me excited. The SLP instructions seem straightforward. Once the pool is made available, where do we supply a CVP side of the boost? So you're talking about sushi. So you're going to have your LP tokens. You throw your LP tokens in the YLA USDC pool, in the onsen of sushi swap, and then power index, you'll have the pool and the farming. And you'll put your LP tokens in, and I don't know, we'll know more when the D app that controls the contracts are released. So It's one of my larger cash positions. That's the beautiful thing about YLA. It's cash. It's represented. It's basically a dollar. It's a derivative of dollars based on vaults from Yearn, which are basically derivatives of LPs, which are another derivative, which ultimately have dollars as the primitive. This is the most fascinating and complicated dollar derivative, yield bearing dollar derivative I've ever seen. So we're talking about, we're getting about 12%, give or take, on the sushi pool. This thing has been going down, down, and down. It's one of the largest sushi pools at the moment. 4 mil and change in value in the position. And you go and Powers YLA is yielded probably around 30%, give or take. That's a heck of a denomination, a heck of a yield on dollars, facilitated by Yearn, facilitated by Curve. Um, so you get 42% of whatever the yield is going to be on the CVP boost, another 20, 30%. This is the most incredible dollar yield derivative I've ever seen. Thought you had to stake CVP to max out the boost. Yes, and that's the whole point. Where do you stake the CVP? Let's go back to farming. That's a good question. Yeah, Mr. Weeby, you're welcome. This is my favorite. See, this is a time in a market where you absolutely need you need cash. Um, you can't be over positioned. You're over positioned. This is where you get hammered. Ethereum looks on the edge. The fact that it's still above these guppies is like standing at the precipice of a crevasse. I mean, literally, you got the 100 SMA 1386 down below, another 200 points to the downside. I got the VIX up as well. Where was it on the daily? So it's been held down. It pulled down a little bit. Let's go back to the 4 hour. So that's what was concerning. It looks like the 200 SMA held as resistance. So, maybe the market will calm down a little bit and we'll have stability. But that's exactly why you're not all cash. And that's exactly why you're not all assets. Because if there's volatility, you get destroyed. So, as of right now, wait, let's go back to power. Let's see. So, there is no CVP staking. You see what I'm saying? I would imagine it's comparable to ASSI. Is it going to load? My computer gets, see. My computer gets bogged down quite heavily when streaming, unfortunately. So yeah, so the point is we'll figure it out, Mr. Weeby. We'll figure it out. So as of right now, what do I got? 35, 40% dollars, including YLA. 23% Bitcoin. You can't, so here's the rationale in my mind. How the fuck are you going to sell Bitcoin? If you bought Bitcoin at $8, $9, $10,000 and you're going to sell it at 50, you're going to owe a fortune in taxes. So you can't sell it. You literally can't sell it. You let it go down, you let it go up. It's painful to watch it go down, but literally, what are you going to pay the taxes? No. So you can't sell Bitcoin. Ren dark nodes, you can't sell Ren dark nodes because they're locked up in dark nodes. VE curve, lock curve, you can't sell it. It's locked for 4 years. Cosmos, if you try and unlock the delegating to a validator, it takes a month, so you can't sell Cosmos. Bancor, it's locked as well because if you remove from the pools, you're going to experience a fair amount of impermanent loss. But whatever, you just get in yield and it's just growing, 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 and in theory, over enough time, doesn't really matter. It's a yield-bearing primitive, financial primitive, as I argue. So that's a solid place to park capital. Polkadot's another yield-bearing asset, and what the hell? You going to sell it? It's up for a couple 100%. What was my Polkadot was like $2. Now it's running around at $30. So can't sell it. I'm not paying the taxes on that shit. I have a position in the power index pool, which is pretty cool. I'm not going to sell that either. It's nicely diversified and it's heavily yield bearing. I think it's 100% APY, but then it's also staking. So that's pulling in another 25%, which is really cool. I can't get anything to load at the moment. Sorry, guys. So PIPT is really cool. You come over to Power Index. If you buy it on whatever you 1 inch, you could get it. But you could also create it. You could mint PIPT tokens, yield bearing, because the components, the constituent components, produce emissions. And then CVP, you're incentivized to stake your PIPT, and you'll get CVP yield, which is cool. Synthetics, who the hell is going to sell synthetics? That thing was 70 cents. It's running around at 16.35. You got to pay all those taxes, and it's a yield-bearing asset producing significant yield, so it's compounding and growing. So that's another asset you can't sell. I can't sell band. It's a small position. One, it's a small position, but it's still up 400%. I'm not paying those taxes. You can't sell because you'll be paying taxes. Oh my God! What a complicated thought process. And you can't sell it either because it's staking. So you have, and it's on centralized exchanges. So I'm just going through my portfolio and why I can't liquidate a lot. I liquidated my Alpha Homura V1 position, which freed up a huge amount of capital, and that was a leveraged pool position for Ethereum. But I consider that my liquidity. So I'll go long on Ethereum, but not when it looks like this. There's been big risk that this falls through the guppies. It's literally so the reason why you have to see this as risky is because merely for it to get this far down on the daily guppies, that was an immense amount of bearish pressure. Albeit, there's hope because this thing ripped down all the way to the bottom of the guppies as well. But if you look back and you really zoom out, it's come a long way. And those guppies are very extended. We're talking about all of 2021. It ripped a huge amount, hundreds of percent. So look how spread out the guppies are. That just shows you how distorted the market is to the upside. You can have distorted markets to the upside. Assets shouldn't appreciate like this. It shows you that the market that was causing the appreciation was completely irrational, which is exactly why I talk about on the stream always downside protection. If something goes straight up, it does come straight down. Look at that, from $2,000, and that wick down was at 1280. Almost a 50%, a 40% drop. I don't want to, it's nice to get in, but I have no interest in buying low, selling high type of mentality generally. But this is some seriously volatile stuff. You can't hold Ethereum. So Bitcoin, I guess I hold that naked. I am tempted on a day like today because I do have the cash to couple Bitcoin with USDC in the Uniswap pool. But the damn IRS wants to tax. Theoretically, if you're following their rules very traditionally, they'll try and it's a gray area whether BTC to WBTC is a taxable event. You could probably get an accountant to sign off saying it's not taxable because it's a network conversion. It's what it is. It's not an asset exchange. Because if it is an asset exchange, you could literally have wash trade all day long. It's the same asset, the same valuation, yet a different asset. So they can't have it both ways. And what they have is a lack of clarity and a complete absence of guidance. And they're just negligent in providing require clarity for citizens to pay taxes properly. And it's quite frustrating. Mr. Weeby, glad to see the site is slow as shit for you too. Yeah, but my while I'm on the stream, my browser, I don't have the strongest computer. It gets hit pretty hard. So it puts a lot of pressure on stuff. What kind of tools do you use to track your portfolio? Spreadsheets, ledgers, SaaS, something else? I just use Delta. Zappify is pretty cool, but Zappify doesn't show everything. But Delta's easy enough. You're able to put in your buys and your sells, and you're able to track your positions. You don't have to get too crafty. I mean, spreadsheets are fun and all, and you can do some calculations. For instance, a great calculation that's always reassuring is when you have like a 10% dip in something, and then you see you have it in an LP position, and you calculate you only experience about a 5-6% in dollar denominated depreciation. So that's the whole point of the dollar stablecoin pairing, which I've been harping about for the last year to protect the downside, impermanent loss to the upside, but impermanent gain to the downside. Nobody talks about it. Nobody talks about it. And Uniswap V3 is coming out, which is pretty interesting. And Hayden talks about permanent loss, and obviously Bancor they transfer risk to the monetary policy. So everyone has their technical opinions, but I'm more so I like the passive LP positions, and Hayden's V3 is more of an active LP position scheme that genius to say the least. But I like passive, and I like impermanent loss because impermanent loss means you're protected to the downside. And everyone's running around, oh, they're worried that their $1,000 Ethereum, when it turns to $10,000, they're going to experience impermanent loss. Who gives a shit if you're going to miss out on gains if you can protect loss? Everyone's talking about losing out on the upside. What if the asset goes down 50% in price and you could be protected and lose 25%? Everyone was thinking about the upside, not prepared at all for the downside. Anyway, so that's why I harp about the topic. John says, to show my infant level understanding DeFi, I don't quite understand why my alpha F die 1. Alpha, your F die, Ethereum die position. Um, Transaction volume has probably been through the roof, depending on the size of the position. It could be many things. Bear in mind, your Ethereum die position, if you're looking at the transaction minimize balance or the Ethereum balance when you press close to see how much is available. It depends on a variety of things. Depends on your position size. Depends on the amount of leverage the contracts, the spell as they call it, is taking. So it's interesting, and Alpha is a very powerful protocol. When I think about Ethereum, I'm probably just thinking about like an alpha pool, and I'll get 1.5. Maybe if I'm feeling crazy, I'll go for 2. I'd never do 2.5. I don't have time for that shit. But 1.5 is usually where I go for on the alpha pools. If I want an Ethereum position, that's what I'm going to do. But if you fund the LP with only one coin, you're essentially buying 50% of the other coin. Yes, that is correct. So if you put DAI into the alpha pool only, you're going to get Ethereum also. So you're basically buying, you're funding the other side. However, technically, if you add to Bancor, the protocol is minting BNT on your behalf, positive single-sided, that's to be said. Well, it's single-sided, meaning it's not minting BNT. They already have BNT on the other side of the pool, whether they incentivize it from their end or persons are actually putting it in. But BNT, bear in mind, will experience full depreciation. It's basically the same as being fully exposed, fully risk on, which is great and all. I got plenty of stuff in Bancor. But I'm not a very risk on person. It's only a little bit of alpha, and obviously I'm staking the Bancor. Not a bunch of cash. Can't go wrong with cash. Hey, look, 1.25. That's nice to see. Finally let my position sit long enough to show 1.25. That's nice. So, things are going to be dipping, things are going to get bloody. Bancor is going to still be going up in yield. And I'm a big fan of their monetary policy. I really appreciate monetary policy because I talk about the crypto space from a legacy financial perspective. And what I see here is actually monetary policy. And Bancor obviously has one of the more fascinating monetary policies, in my opinion. Super gray area regarding taxes. Shit, yeah. So I listen. I paid token tax. I'm going to let them do my taxes. That's the best I could do. I don't have a capacity to do anything otherwise. I'm worried V3 puts me out of the LP game and favors bots quants. V2 will remain, I assume. Yes, V2 will remain, but also V3 will have V2. You don't necessarily have to set ranges. You could just be exposed to the entire curve. And then it operates just like V2, unless you constrict the range and you apply your value to specific parts of the range, and you can optimize if you want to. But that's the whole thing. If you want to maximize gains and whatnot, but sometimes you want to be passive, and there'll be an opportunity for that as well. I prefer the passive. I prefer impermanent loss. I prefer impermanent gain, which is the other side of impermanent loss, is downside protection. And that's what was sorely needed in times like yesterday and today. What do we got? I'm down 10.99% for the week. For the day, 6.56%. Yeah, is what it is. I mean, compared to March of last year, still sitting on like 1,400% gains. It's up like 22,000%, 2,200% at one point. But it's all protected now. Such a large portion is protected. And Bitcoin, you have to pull out to the long term, and it's 200% pretty much appreciation per year, annualized. And I can't liquidate the other shit anyway. You can't liquidate dark now. You can. Would you want to if you could? And V curve, you can't do anything with for 4 years. Anyway, I bought that at 25 cents, and it's sitting around at $2.70. 10x. And I have my small other portfolio of my ancient stuff. I mean, are you really going to liquidate Syscoin, Blocknet, Zcoin, StakeNet for the old stuff? No. Bought that stuff back in like end of 2018, 2019, when everything was completely obliterated. I mean, Blocknet's sitting on 100 and something percent gains. Syscoin is sitting on like 400% gains. Damn, IrisNet's doing pretty good. Where's the captain? Captain's not on. Iris is doing pretty good, man. Wow. That's up like 400%. Zcoin's not up much. Well, it's just Firo nowadays. I wish it was up a little bit more. But it's a 20%. StakeNet's pretty horizontal, but the DEXs, the UTXO DEXs haven't even come online yet. The market's not mature. The market's trying to figure out what the heck it's going to do. You got Ethereum DEXs, and Polkadot's going to be fire, and Cosmos is going to be fire. I don't know what's going on. And the debauchery. It's like a Roman orgy. What's going on in Binance Smart Chain? That's just like tragic and interesting and perverted at the same time. What else? There's plenty of other EVM smart contract blockchains. It's just going to be all interoperable. You've seen what Andre put out with regard to the multi-chain. So the multi-chain and interoperability will be seamless at some point, and that's just going to further inflate the entire DeFi space. And as there's more opportunity, more capital flows in, and no matter how destroyed or perverted the legacy financial system is, it's still starved for yield, still begging for opportunity. So no matter how devalued and debased the dollar gets, it's still the dollar, and the world still runs on the dollars. So they'll still be trying to put it places. They'll be putting it in -1% treasuries, and that's what they're doing over in Europe. They're literally buying negative yielding debt. What a ridiculous. It makes you want to exit the system and makes you want to hold crypto. What are you going to buy? -1% bonds? What the fuck? What are you going to buy? These equities that are probably tanking today. And it's pretty brutal. It's not an implosion. It's not 800%, 1,000%. So it seems like just a depreciative cycle. But that could unravel at any point in time. I don't trust equities. I don't trust them. I don't trust these companies. I don't trust these people. They have more money in the legacy financial system, and they push around these stocks and they take your money from you. So I have my equity positions, but it's not the stuff that the big money is, Microsoft and whatever, and Apple and Tesla, I'm not playing that garbage. I don't trust these people for a minute. I enjoy the crypto space because I have basically permissionless capacity to move around capital like you can't in the legacy financial system with what 2-day clearing time after you sell something. What kind of bullshit is that? No, you pull your money out of Aave, you have your money. Boom. And that's the way the protocol is designed. So there's some cash. I don't trust anyone, so I got the cash sitting on the sidelines. Man, if Bitcoin dips to like upper 30s, oh, I'm so gonna buy 10 Bitcoin. Mr. Weeby, is there a level on the BTC chart would trigger spot buys for you? Yeah. Yeah, I kind of just mentioned it. Let's take a look. In fact, it's the temptation I have with this cash. So the cash sitting about 350 is Ethereum and Bitcoin and it needs to be on Ethereum. So my other Bitcoin is cold storage, locked in a vault somewhere, so on and so forth. So the other Bitcoin I have is cold storage. So I have that cash there. That would be Ethereum based Bitcoin and Ethereum for in and out. Buy it spot, things go up, great. But things look shitty, you liquidate, which is exactly what I did with my Ethereum, my alpha position. Not afraid to get in and out. That's not cold. That cash right there is not for cold storage type asset acquisition. But Bitcoin looks like shit right now. I don't know if you guys have seen, but Bitcoin broke the 200 EMA, 200 SMA to the downside on the 4-hour and flipped support into resistance. So there is much reason to be fearful right now. Right now is much worse than here. Because as you can see here, this never held the 200 SMA as resistance. But as you can see here, it just held as resistance. There's good reason to not trust this at all. There's good reason to expect a bearish cycle. And what you're really looking for to be fearful, lower low. If this breaches like 42, for the 40s, lower 40s, if you really get them below like 42, 4 right there, that's bad. And you don't want to sell down there. You want to sell up here and have it go down there. You want to be able to sell high and buy low. So that's the whole risk. Do you sell here? What if it goes up? But there's a lot of reason to think it's not going up, being below the 200 SMA and the 200 EMA, looking with a support flip resistance. So if I had that excess Bitcoin in Ethereum tradable, which I'm not selling it, and I'm not transferring it to Ethereum because I'm not paying taxes on it. Absolutely not creating a taxable event. No, I bought 3,000, 8,000. The most expensive Bitcoin I think I have is like $13,000. So heck no, am I paying them on taxes? Not happening. So I'll be buying. I would love to see 30. I don't think we're getting the 30. Why not? We could get the 35. That's actually a heck of a support region. Look at that. Do you see that? My goodness. That's a lot of downward pressure to be able to get there. But we're talking about right around there. Let's say the midpoint. Let's say we flip previous resistance into support. That'd be a hell of a region for support to be held. Now look, previous resistance to support, and you can see how price action plays out. A breach to the upside through previous resistance was so explosive. Resistance, breach to the upside through previous resistance. If this holds as support, that's a great buy opportunity. Logically, what would I do? I don't know. 200 the Bitcoin, 300, but you want it to be liquid. You want to be able to buy and sell. And if you buy in Bitcoin, you don't necessarily want to buy and sell. Bitcoin is something that you just hold. Maybe I just go back into the alpha pool. I don't know. Picky to buy, quick to sell. Picky, picky, picky. Quick to sell. Done. Out. Buy. Protect the capital. Out. Look, when was I out? I had some tradable Bitcoin. I was out probably up here, like 50. I was at 52.5. Now 50.91. Sold high. This is gonna just, there's nothing bullish about this whatsoever right now. This thing will keep spiraling. So 36, 37 is probably would be a spot buy on Bitcoin for me with that free capital that I showed you. Anyway, not much else to talk about. I'm really interested in YLA and CVP boost. And even just the sushi yield is nice because it locks it away for 2/3 escrow and let that shit sit for 6 months. And maybe sushi somehow rebrands. I mean, I'm very bullish on FTX. I like what they're doing. So I'm not that sushi is a manifestation of FTX. It's obviously contentious and quite frustrating why it was created. It was a fork of Uniswap, and that's not a good thing. But it's still around and it's quite valuable. And FTX has made modifications and realigned incentives. And there is X Sushi, and Aave has AX Sushi. So it's not going anywhere. So the question really speculatively what the valuation is. I mean, there's no reason really not to put YLA in a USDC pairing. YLA is basically a dollar. USDC is a dollar. It's basically a dollar LP position. And to top it all off, you're going to get CVP boost and you're going to get CVP emissions from the power pool staking. So it's just literally, it's just free cash. I mean, obviously you have your risks associated with the smart contracts, but I consider Curve basically de-risked. Tether, I don't know. Obviously, I have a significant exposure to Tether in the YLA type position. You're involved, V1. They've been around and have hundreds of millions of dollars, so they're quite de-risked. And Power Index has going to have rolling audits. If you look in their forums, do I have it up? Yeah, so they're getting insurance. They're pushing for insurance. So in a short period of time, you'll be able to get insurance on your power contracts and so on and so forth. So insurance and rolling audits has been approved. I voted yes for that. So this is probably my favorite thing going on right now. But I know folks are like 30% on dollars. Not going to get rich off that? Sure, no. But that's the whole point of work. You work, save your money, and you actually get livable yield and a yield and growth on your dollars that you could actually have a future with. And that's really the whole point of what I see is most exciting about the crypto space. Out of the process, you can get wealthy if you get lucky with appropriate non-dollar assets. Don't think Bitcoin's going to be worth a fortune because the legacy financial system is so screwed. I don't trust a single thing. Stop trusting. Stop trusting. The second you trust something, that's when you're going to get burned the most. Damn, rent's down 25%. Come on. That had $1 floor solid. Dollar floor. I don't know. My entry was 6 cents. So what am I worried about? Curves down 3%. That thing with the Coinbase listing was good. Cosmos down 30%. I don't know. What did I get it for? I got it for about 90% cheaper than where it is right now. And that thing's just producing inflation derived interest. Yield. I don't know. Anyway, um, why are you busy fudding on sushi Twitter? No, not fudding. I use it. I use sushi. But it obviously was created out of the wrong intentions. It was I just that is obvious. But I like FTX. FTX is the compared to Binance. FTX looks like a saint compared to Binance. So bullish on FTX as a company, as an organization. Will I ever use their centralized exchange? No. But what they're doing, I like. Therefore, indirectly, I think sushi has potential. But I don't own any sushi nor X sushi. No reason I'm not going to use the LP positions. They're basically Uniswap V2 positions. So, that's the deal. Brad, if you stake YLA in the upcoming CVB pool, you won't be able to stake in sushi at the same time. No, the YLA CVB pool is going to be YLA USDC. Basically, you're going to be staking your sushi LP tokens. You see what I'm saying there? So that's the way it works. I mean, you're only getting 10%, but bear in mind that's 10%. some nice yield locked up. 135 sushi. I'm not complaining. What the hell could complain about that? All right, let's wrap this up. I'm exhausted. I got a lot of work to do. I thank you for joining. 11:57 p.m. on Thursday, March 25th. 26 people in the stream, 13 likes. We can do better. You know, the market's down, so people's interest in crypto is down. They're getting hurt. I ran a poll yesterday, and people were losing 30, 40, 50, 60% of their money. And a lot of people answered, biggest mistake of my life. Maybe that's a topic for tomorrow. That's why I do the stream, boys and girls. This is not something to destroy your financials over. This is opportunity. And what you have to be is rational. Proper position sizing, proper portfolio balance, and no aping bullshit. No. This is the opportunity of a lifetime. So don't waste it. Don't waste it. Thank you for joining. I wish you all a wonderful day. I will see you tomorrow. Peace.